7 crazy predictions for 2021 from yours truly. Stay tuned. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property TV. Happy New Year. Thank goodness we're saying goodbye to 2020. Seriously. Anyways, every week on Prime Property TV, we take a closer look at the Toronto real estate topics and updates that matter the most to you. And on this episode, it's the annual third or I don't recall. Anyways, it's some kind of annual tradition in me making 7 crazy predictions about next year's real estate market. So if you like hearing me make a total fool out of myself about my predictions or be right, make sure you are in the right place. So make sure you smash that like button and subscribe to the Prime Property channel for more awesome real estate content just like this one. The button to subscribe is somewhere right here on the bottom right hand side screen here. Now, for those of you who keep score, me, this is not COVID by the way, and why wouldn't I when you hear my numbers? I pulled up my predictions from last year, and here they are, just, proof of pudding. Number 1, this is what I said. Prices are going to hit 900,000 average at some point, and we hit that in February in 2020. This was just silly. I didn't expect the February price increase to be over 10%, but we hit it fast, and this was before pandemic, so check. Number 2, I said downtown pre-con prices will reach 1,500, and pre-pandemic, 2 major projects launched in downtown. That was at $1,550 per foot. Check. 3, I said there would be a first rate cut since 2017, and we had a massive one because of the pandemic. Check. Number 4, laneway housing would become popular. Remember that house that sold for $800,000 over asking, the little POS, because it had laneway potential? Check. 5, the Liberals would pass their next level super first-time home buyer incentive, and that literally just happened a few weeks ago. Check. 6, I said there would be a resurgence in the freehold market, especially in the 905. Check, check, and check in every area in GTA. Number 7, I said there'll be more pre-con cancellations outside of the Crestford receivership debacle. I'd really say not much, so I would not give this a check. But 6 out of 7, pretty good. Good pat on my back for me. But seriously, all jokes aside, I'm not saying I have a crystal ball or anything. I'm just looking at the data and the behaviors of consumers and government and trying to draw a conclusion of my own. You don't have to agree with me or you don't have to believe me. It's your choice. But I want to present the information that really makes you think about what's going to happen and what could happen based on the data and behaviors. I'm not glued to a certain bearish or bullish perspective of the real estate market, nor do I wish for it to be a specific way. Personally, my business carries on whether the market's good or bad, been through worse. It just doesn't really fluctuate much. And my portfolio cash flow, so I don't freak out, I don't sell. I'm just opportunistic if I can refinance and buy. But what I'm trying to say here is you can make money in real estate as an investor or as a realtor, whether it's up or down, if you know what you're doing. It's just easier if it's going up because more people can do it. Anyways, end of point. So moving on to my 7 crazy predictions for 2022, because I know that's what you're here for and really here for is that. Now, as usual, I'm going to put my crystal ball meter about the prediction and how likely it's going to happen, with 1 being somewhat likely to 3 probably going to happen. So without further ado, number 1, we're 100% going to cross $1 million average price point through crystal ball. You see, this one's as close to a slam dunk as possible. We're like $50,000 away from $1 million average price, or 5% increase. And I think we even get there by spring of 2020. The only real thing that prevents this from happening is if the government drops some kind of crazy monetary policies that stop borrowing from the banks. I go over this in detail in November's podcast about how potentially the real estate market could crash and what will cause it. If you missed that, you can check it out. The link to it is up here. But realistically though, because the government's trying to stimulate spending and resuscitate the market right now, I suspect anything that to do is going to increase the velocity of money, make people spend more, not the other way around. So that's why this is likely to happen. Number 2, mortgage rates remain super low through crystal balls. Banks control mortgage rates. They all want more business, and HSBC just dropped the bomb with a 0.99 high ratio mortgage rate. Their standard 5-year closed variable is 1.59 right now. So can they go lower? Maybe. That'd be interesting. But are they going to stay low, sub 2%? Yeah, I think most definitely. See, I can't see interest rates going up right now because a lot of economic reasons. The other one is Tiff Macleay, our new Bank of Canada minister, straight up said interest rates from Canada staying low until 2023. So I guess that 0.25 over that rate is here to stay. So 0 worries on interest rate. Is this going to add fuel to the real estate market? Absolutely. I'd say interest rates are one of the biggest driving factors of people buying real estate. So watch out for that. Number 3, stress test gets reduced. 2 crystal balls. Now, why are they going to reduce the stress test? Well, because the interest rates came down and the government needs real estate to stimulate the market. It's the biggest thing that's driving GDP, right? It's like 13% of the total GDP. Now, the stress test, what's currently being tested at right now, the qualifying rate is 4.79%. The original plan was to test applicants 2% higher than what they were borrowing at. And when it came out, rates were around 2.5. Now they're 1.3, which means that people are being tested 3% higher than what they're getting, which is stupid. This is what happens when the government arbitrarily picks a number to test it at. So I suspect they're going to make it dynamic to keep everyone happy. So instead of the 4.79 right now, maybe they'll just make it 2% from what you're borrowing to make consumers happy, but keep the stress test so that the financial sector and people don't freak out and they remain happy. Now, if they do make this change, it's probably going to give everyone another 10% purchasing power. You think that'll add fuel to the fire? Yeah, definitely. 4, we're going to break transaction records. More than 113,000 this year. 2 crystal balls. You see, I left this for the middle of the list because if you think about how likely prediction 1, 2, and 3 are going to happen, this is going to cause prediction number 4. The record number for the amount of sales and transactions in 1 year was 113,000, which was in 2016. We're going into a market with the lowest interest rates ever, like sub 1 in some instances, an abundant supply of condos for people to buy, first-time home buyer incentives that got geared towards buying condos that just got juiced up. The government's trying to stimulate the economy and potentially reduce the stress test. Yeah, I think that's just a recipe for having tons and tons of traction. You know what? I'm just going to change my prediction. 3 crystal balls. Number 5, garden suites get popular. 3 crystal balls. This one's kind of cheating. If you've been talking to me recently in the last 2 weeks, you already know that I've been telling everyone the requirements for garden suites will come in Q2 sometime in 2021, which means people can start planning for these and it'll make news. All it takes is one cool garden suite to make it popular in media headlines, and bam, everyone's going to be flocking towards those. And these should be, in theory, easier to build than laneway housing. 6, condo prices will stop trending downwards by October 2020, a month after students come back to school. I would say 2 crystal balls. Now, the number of condo sales right now is surprisingly increasing in a very weird pandemic type of market. However, prices aren't trending up because there's this damaged supply, right? So when the pandemic hit, I was preaching to everyone, be patient for the condo investors 2 to 18 months before we see any signs of life for condo prices coming back. This is before the pandemic. And after the pandemic, I suspect it will be post-September of 2021 because that's when the students should come back. This is both the international students and the local. Granted, I can't control what the post-secondary institutions will do, but I know they're itching to put students back into the campus because why else they're in for-profit business, right? Number 7, freeholds will continue to dominate and be in high demand in the 2021. 3 crystal balls. Now, the freehold market will continue to dominate because there's just no supply right now and the demand is so high. The market very often swings between condos and houses based on where the value, the buyers perceive the value is every few years or so. It's been a super strong bull run for condos in the last 5 years and we've all made money on it. We've all made so much money that condos, even during a pandemic, only reversed back 1 year's worth of price to September 2019, which is right now. That's how much they've appreciated in the last 5 years. The pendulum has swung and it's going the other ways and the freehold should dominate the next little bit. I think this bull run for freehold market in the GTA is going to be one of the final ones before the average price of a freehold becomes absolutely unattainable for the average Torontonian. We're getting very close. Let's just assume the stress test gets reduced in my other prediction a bit, and now you can borrow 5 times your gross income. So your average income of a young millennial couple is about $70,000 each, or $150,000 in total, but let's just say $150,000 for ease of calculation. That puts your maximum borrowing capability at $750,000, and if you have 20% down, gifted from somebody or saved, that's a $950,000 house. That's basically where the average price is right now. So there are houses that are less than that, and there are houses that are over that. But once the average reaches about 1.1 or 1.2 million in the next 5 years or so, that's it. Housing will not be attainable by most people. And that's honestly where I think we're heading in the next 5 years. And it's not to scare you or anything, but that's where I truly see the medium-term real estate heading. Unless there's another extinction level event, God, I hope not, then I think that is kind of where our trajectory is. Hopefully this was helpful for you, and if you're looking to make a real estate move in 2021 or just lost and unsure what the right move is, you can book a call with me using the link on the screen. It'll be right here. It's www.chatwithzen.com. Until next time, stay safe and good God, thank goodness, goodbye 2020, hello 2021, and hopefully it'll be a better year. And remember, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.